the time, I assume, still. What are they saying to you? If 1 million COVID infections and breach in hospital capacity, or at least the threat of breach in hospital capacity in many areas across America right now isn't enough to lead to material spread widening, what on earth is?
So we think that, really, if we don't see the fiscal stimulus package come through in a meaningful way, in a timely manner, then that would be enough to create some volatility. Also volatility around the back and forth of, negative COVID headlines versus positive ones. While the vaccine headline today is a positive one, tomorrow when we get the, negative COVID news, it could not be. So when we think, while we're not, totally unloading our risk, we do think it does make sense here to be a little bit cautious because this war, is not over, and we still have a fiscal stimulus package that, states need, consumers need, small businesses need, and ultimately that has to get delivered.
Noelle, there's an important distinction here between volatility in headlines, volatility in beta sentiment, and the alpha aspect, the idea of a concern about companies going bankrupt, being unable to finance themselves going forward. Which is the risk that you are concerned about with your caution?
So for us, we're thinking, more of a big picture. While there is a concern that companies are going bankrupt, there are likely to be some defaults. There already has been this year. We're not looking at, the numbers that we're in March, where it was around 28% expected defaults for 2020. But again, that's largely dependent on the fiscal stimulus package and that getting delivered.
Noelle, great to catch up. Appreciate your insight on this market. A rare interview where someone is concerned about what's happening in the near term and what it means for this market. Noelle Coram, thank you. Invesco Portfolio Manager. I joke a little bit. It is about that tug of war between the short-term risk and the long-term hope. The hope this morning, fueled by the headline out of Moderna, that we do have a 94.5% efficacy on their vaccine in development. Here's the price action for you. The Russell advances, the small caps, the winning trade over the last week. The Nasdaq is the losing trade over the last week. Tom, we talk about that losing trade. Let's talk about some single names. Zoom down by about 5% in early trading. United Airlines, which you mentioned a little bit earlier, up by a little more than 10% in early trading. That just gives you an idea of the shutdown versus reopening story that is bleeding through this market.
No, it's a guesstimate, John, but it all comes down to the aggregate demand, and it's rolled over. Lisa, I believe, mentioned five-year forwards below. Let's summarize that quickly, John. In the United Kingdom, there is a deflationary tendency. Europe is maybe flat as well, and then in the U.S., it's indeterminate. But right now, disinflation is in order.
Can we unlock some of that reflationary cyclical tilt with the hope of a vaccine as we work our way through some really difficult months in the United States of America? That is the trade that is being put on increasingly over the last week. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Coming up next, Stephen Stanley of Amherst Pierpont, the chief economist from London and New York this morning. Good morning to you all. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. There's word that another vaccine has been found to be highly effective at preventing the coronavirus. This time, it's Moderna that's out with details of a late-stage trial. The drug maker says its vaccine has 94.5% efficacy. Results also suggest the vaccine may block severe cases. The report comes a week after a similar vaccine developed by Pfizer and BioNTech was found to be more than 90% effective. The chairman of the Securities and Exchange Commission is stepping down. Jay Clayton will leave at the end of the year. Clayton is a former corporate deal lawyer who has led the SEC since 2017. His term is set to expire in June. President-elect Joe Biden's top coronavirus advisors say a national lockdown isn't on the agenda. One of them, former Surgeon General Vivek Murthy, says the preferred approach to fighting it is, quote, a dial that we turn up and turn down, depending on severity. U.S. case records have hit records over the past 2 weeks. President Trump could potentially tie the hands of Joe Biden when it comes to China. Bloomberg has learned the president plans several new hardline moves against Beijing in the remaining weeks of his term. The National Security Council says future presidents will find it politically suicidal to reverse what it calls President Trump's historic actions. And in sports, Dustin Johnson made history while winning his first Masters tournament. The world's top-ranked golfer shot a record 20 under par to win by 5 shots. It was the largest margin of victory at the Masters in 23 years. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
According to some estimates, a national lockdown costs $50 billion a day and hundreds of thousands of jobs every single day. Ideally, we won't go to a lockdown. I will not go. This administration will not be going to a lockdown. Hopefully, whatever happens in the future, who knows which administration it will be. I guess time will tell. But I can tell you this administration will not go to a lockdown.
Hopefully, whoever that administration might be. That was about as close as we got over the weekend to recognizing the future Biden administration. There was a tweet, then there was a retreat, there was that statement on Friday, then there was the walk back shortly there afterwards as well. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This morning, what a morning we've got for you. It's a repeat of last week. Nasdaq negative, Russell small caps to the moon. Here's the price action. S&P 500 futures up 37. We add 1% to the record highs at the close from last Friday. We add a bit more weight to them. In the bond market, the sell-off fades. Yields are up 2 basis points to 0.9160%. Last Wednesday, high end of the range, 97 basis points. Right now, with 5 or 6 basis points south of that, Tom, we're not getting that big move in Treasury yields. Lisa pointed out early on, after the headline cross from Moderna, that 94.5% efficacy rate for their vaccine gives equities a boost. Treasuries, no big moves this morning.
Well, it's, after Pfizer, and the answer is we saw a huge move of Pfizer. Again, folks, I'm going to make clear that what this is about is deeply discounted sectors, deeply discounted categories, and they've bounced off that discount, but nowhere near their means of February 14th and before. Look at energy, look at banks and the others as well. We'll continue to monitor that. I'd suggest look at what matters in the mid-morning, and that is the open with John Farrow at 9 a.m. Right now, Emily Wilkins, Bloomberg Government. We just heard the president talk there about, well, the transition or the non-transition, as you'd like to put it. Emily, real simply, what will you listen for today in your Washington?
Well, one of the big things to be listening for is that Biden and Harris are expected to address the nation on their economic plan, seeing what details are in there, what Biden continues to push. It'll be a little interesting to hear what he decides to speak about because he doesn't yet know whether or not Democrats will have control of the Senate. And that's going to impact exactly how much Biden can actually get done of his economic plan.
Okay, well, they got to get something done, and there's going to be a plan in that. But come on, General Milley's comments over the weekend were thunderous. I've never seen anything like that from a commanding officer of our military. You had the president just talking and on and on and on. What's your resolution through the week so this week doesn't become, say, the second week of January?
I mean, one of the things we'll be looking for is, definitely seeing what happens with the Trump campaign. We did kind of see him seem to initially admit that the Biden administration will be coming next over the weekend. Then we saw him walking back, saying the election was rigged, that he conceded nothing.
Oh, yeah, but Emily, Emily, I don't mean to interrupt, but simply who is advising the president, or is he all alone by himself?
There are a number of people who are still talking to the president within the president's inner circle. I think it's a lot of the same figures that you've heard, Jared Kushner, Rudy Giuliani, those types of individuals. And I think a lot is going to come down to seeing not just what the president says, but also what the lawsuits say. We saw the lawsuit change in Pennsylvania over the weekend to cut out a major allegation that Trump campaign people were not able to watch the count. And so I think that's kind of a sign on how the campaign is thinking about things and how they see their legal challenges.
Emily, we've been playing this silly game of trying to interpret the president's tweets and comments, not just for the past weekend, but for the past 4 years. And we're doing it again over the weekend, looking for a concession that isn't there. Can you just tell me when these states will start to certify their results?
So the official date is December 14th. That is when states are going to say, this is it. These are our electors. and sort of lock everything in. Another date to keep on is December 8th. That's when anyone who wants to contest the results for a particular state has to sort of get everything in by. So those are kind of the two key dates to watch. And I mean, obviously, we'll be seeing what happens in the next few weeks if the Trump campaign does sort of admit that the Biden administration is coming up next. And we're also going to keep a look on the GSA, that is that government entity that has to officially sort of push the button, give the green light, say, yes, this transition is happening, and that will sort of make things a little bit easier for the Biden team to get settled and get adjusted.
Emily, the market has moved on. The market has voted, and the vote is that Biden will be the next president, according to the lack of turmoil, frankly, in markets, despite the fact that some could say there still is somewhat of a contested election or it hasn't been called. Now the focus very much on the vaccines that are going to be coming out as early as later this year, potentially, and then next year. And then there's a question of fiscal support. Is that basically dead in the water based on your conversations with current Congress members in Washington?
I don't think anyone on Capitol Hill would necessarily classify fiscal support for COVID as being dead in the water. I mean, just on Friday, we heard Democratic Speaker Nancy Pelosi say that it was a top agenda item, that it's all hands on deck. We've seen similar things from Republican Senate Majority Leader Mitch McConnell. The question is, can they actually come to an agreement? And I think we might sort of see that this week because the House is back in session, the Senate is back in session, everyone's done with the election and are getting started, ready to legislate again.
Oh, then what are they going to legislate? I mean, I'm absolutely fascinated by that statement, Emily. They're going to legislate what? The answer is we don't know until Georgia, right?
Well, not really. I mean, we do have a government. The government does need to be funded past the December deadline.
Yeah.
Like, we're headed towards a government shutdown right now, so they're going to have something on that. And I mean, I think that there is a momentum on either side to potentially get something done with coronavirus stimulus. I think there's a question onto whether or not that will be done, but I think it's fair to say that that's something that lawmakers are at least going to be trying to work on in the next few months.
Emily, do you sense there is a concern in Washington about governors now introducing more restrictive policies? In the conversations that you're having with people on Capitol Hill, do you sense that concern?
I think to a certain extent, throughout this pandemic, the federal government has sort of looked to the states and state governors to be the ones to sort of mandate for their own citizens what they're going to do. I don't think this is a big change in terms of what we've seen. I think this is a bit of a repeat from what we saw back in the spring when governors started talking about a lockdown. I don't think this necessarily changes anyone's prerogative on Capitol Hill of whether or not stimulus does need to get done. But I think it's definitely something that people are watching to see how governors respond and to what degree they view the threat.
Emily, great to catch up, as always. Emily Wilkins there of Bloomberg Government. Tom, that's the story, isn't it? If the governors start to introduce more restrictive policies, if they start to inch towards lockdowns that look even remotely like what we had back in March, April through May, then surely that just forces the issue down in Washington, D.C., whereby they've got no choice whatsoever but to push through a bill. Yeah,
the only thing that forces the issue to me is a jobs number turnaround, unemployment rate turnaround, and also, John, the sheer hardship of income substitution going away. What's interesting to me, John, it's radically different than what we're experiencing in the United Kingdom. To me, that's the polarity right now between across the Atlantic, I should say.
Well, the stay-at-home restrictions this time, Tom, are advisories. They're not orders, and that's the shift. How on earth do you tell someone they've got to stay at home and not work if you don't replace their income? I don't see how you can do that. And I don't see why anyone's going to follow that if you can't.
That's where you'll get finally something to act here. You know, again, and Greg Vallier's got the math this morning, as do many others as well. We're going from trillions of dollars of aid down to one-ish, even under one-ish, if you believe the Republicans. And most of the experts we talk to, John, say that really doesn't move the needle.
The news this morning moves the needle. Moderna, 94.5% efficacy. The stock up by 12.4% in pre-market trading. Laura, Lisa, rather. I'm not sure why I've called you Laura.
That's the story in the equity market. I love that.
That's not a story from the weekend. Just be sure about that.
Thank you.
Lisa, in the equity market, we advanced on Moderna by about 12.4%. The story of this rotation, can you get that durable move if the bond market doesn't participate. And as you said an hour and 25 minutes ago, right now this morning, the bond market's not playing ball in a big way.
And what I'm wondering is how much is this a bet that there will be reduced fiscal support as a result of the optimism around vaccines, and how much is this, to your point, simply an unwind of other positions and the bond market's already been through that?
Laura, Lisa, Laura, what am I doing
You're killing
this
it,
morning?
John.
What
John, you're
happened
just digging
with Laura
yourself
over the
a hole.
weekend?
John, I got so
know.
much response
know.
on this. I mean, Lisa's doing Chinese takeout for Thanksgiving, but John,
Yes,
you
I
and
am.
John, it's a new thing. Thanksgiving Zoom. We can do it.
I would love to do that with you, Tom.
You know,
I'd love to
I
do
mean,
that.
I just zoom
I think
right
this would be
in.
the 4th or 5th Thanksgiving we've done together, but this one will be over Zoom. That's
Zoom.
fun. A couple of years back, it was Laura, you and me doing
Yeah. It
Thanksgiving
was.
together.
Yes,
I hear
That was
Laura's
nice.
Laura.
great.
That was nice.
Yeah, she arrived sober.
She's-
So how many times a day do people ask you when your vaccine is going to be available?
Yes, well, that's definitely a very regular question, whether it's from employees, customers, media, or my mother.
The outlook for the economy is extraordinarily uncertain and will depend in large part on the success of efforts to keep the virus in check.
They're torturing themselves to explain that they're there, ready, willing, and able.
The Fed has basically done all it can do, with the exception of extreme emergency measures.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
From London and New York, this is Bloomberg Surveillance. Good news on the vaccine front. Last week, Pfizer, this morning from Moderna. What does it mean? More fuel for the small caps bid. The Russell up by 2.21%. The Nasdaq down by 1/3%. That spread reopens again. That rotation is back on. In the bond market, you want to see that supported move into financials for value, for the cyclicals to pick up. Do you need the bond market to play ball? Right now, it's not really. Curve steeper, yields are higher, but just by a little bit, up 2 basis points to 0.91%. Last Wednesday, we topped out at 97. Another thing that's not playing ball, switch up the board and get to foreign exchange. This has been the story of the last week for me. If you have that improving cyclical appetite, if you have that move into international equities, that bid into Europe, what's going on with the euro? Negative 0.1%. Euro dollar 118.25. Tom, I keep coming back to it. I keep beating this drum because this is the trade that just does not fit neatly with the story we've been told over the last several weeks and months.
Pacific Rim currency pairs, John, out to new highs here about 2 hours ago, and they've ebbed away as well. As we see Dow futures move up 500-something down to up 485, 1.7% move. Right now, and this is really important on a Monday, let's recalibrate the American economy. He is award-winning. Stephen Stanley with Amherst Pierpont does wonderful work with the conventional function y = c + i + g + whatever the export noise is. Steve Stanley, what matters right now within that equation?
Well, I think consumption has really been the star of the show, and that's what we're looking at. I mean, consumer has held up much better than I think most people expected through the pandemic, and now with renewed restrictions and kind of cuts in mobility a little bit, I think there's obviously some concern about whether the consumer can continue to get back toward normal over the next couple of months.
Give us the calendar of the need for income substitution. Benefits, I guess, 1231 disappear for many, but how urgent for you is income replacement right now?
Yeah, I think we're in a different place than we were in the spring. I mean, in the spring we put forward the $600 a month unemployment benefits as well as a round of rebate checks for everyone. And I think at this point, the whatever income replacement we do probably needs to be more targeted. So I think the idea of continuing the unemployment benefits, certainly, continuing them beyond mid-year or the end of the year, but also maybe putting forward another bonus. It doesn't necessarily have to be $600, but perhaps $300 or $400 or whatever. Makes a lot of sense because there's still plenty of people who basically can't work because of the pandemic. I'm not sure that we need across the board help the way that we got in the spring. So that, to me, that's the key distinction.
And Stephen, this is a really important nuance because right now we're looking at American consumer finances that are the best shape in decades. People took these checks, they paid down their debt, they don't have anywhere to go to spend money, and so you're seeing really, really good balance sheets, but that's an aggregate. What is the long-term economic consequence of the lower tier of workers who are seeing their jobs get cut at a faster pace and who don't have the same kind of cushion even after the round of stimulus?
Yeah, well, I mean, obviously those are the sorts of people that have to live paycheck to paycheck. So the loss of a paycheck means a lot more for someone in that financial situation than it would for, someone that has a nest egg. And I think, again, that's why there is, in my view, there is urgency to make sure that we're providing ample support to that group of people, the people who are unable to work and need the money right away. I think, maybe the urgency for the rest of the population isn't as great. I mean, we certainly made up over half of the jobs that were lost during the lockdown. So there are a lot of folks who were out of work in the spring who are back, but there's still plenty who are not. And I think, those are the folks that we want to try to take care of, and especially now that we have a sense that perhaps it's only a few more months. Maybe the vaccines are broadly distributed by the spring, and things can get back to something much closer to normal at that point. So if I'm a lawmaker at this point, it makes it easier, I would think, to say, okay, well, we can support people for 3 or 4 more months, but it's not an indefinite thing anymore.
Stephen, let's talk about the economic data. Tom mentioned the Asian currencies doing tremendously well recently. The data out of China, fantastic, decent again this morning. I don't think it's ever too early to talk about payrolls for this month when it comes out in early December. Stephen, what are you comfortable forecasting at this point, given the direction of travel with economic restrictions coming up across America?
Yeah, I would say most likely that we're going to see another deceleration, and this one could be more significant than what we've seen over the last couple of months. The pace of growth was fairly steady over the last 2 or 3 months, I would say, certainly in the private numbers. You're probably going to see a slowdown, obviously, with the virus having picked up. But I would say, we've seen a flurry of new restrictions put in place over the last week or so. And so my guess is, last week was the payroll survey week. So my guess is that whatever slowdown you're going to see in the pace of job growth over the next several months is more likely to be clear in December than in November. I think we'll get some slowdown perhaps for November, but then maybe a more significant one on the back of some of these virus restrictions in December.
Let's add to this then, Stephen, and think about the fact that this economy has had the stress test, a severe one, back in spring. Can you model what it might look like when you get the same stress test again? You have it once, you get it a second time, and how corporations and individuals might respond, maybe differently?
Yeah, I think the one thing is that people have kind of gotten used to the new reality. So if you think about, for example, manufacturers, they closed their plants for almost 2 months, and then when they came back, they had to retool their operations to provide for a more socially distant workplace. And having done that, I think it makes it far easier now because they've already kind of adjusted. So really, I think the bulk of the adjustment that needs to be made now is just kind of dialing up and back the degree to which people are getting out and about, the mobility and the level of contact that people are having. And so that does affect restaurants and high-contact industries like that. But I think the bulk of the economy, the rest of the economy, hopefully has already made the necessary adjustments and won't be disrupted too badly in the current situation.
Steve, is the stock market linked to your world?
I think I would look at it as a gauge of sentiment. And I think, clearly at this point, it seems to me that the stock market is looking through, or investors are looking through the current bad news and into, the prospect of an effective vaccine at some point next year, and then getting back to something closer to normal over the course of 2021. That doesn't do anything for us today in terms of the number of cases and hospitalizations and deaths, but it certainly suggests that people are hopeful that things will get back to something closer to normal as we move into 2021.
Stephen, there is some hope in this market this morning, that's for sure. Stephen Stanley there of Amherst Pierpont. Thank you, sir. Let's talk about that hope and the fuel that goes into that hope this morning. Moderna, 94.5% efficacy in their trials of their vaccine, follows Pfizer last week at 90%. And this is what happens in this market, Tom Keene, up 13% for Moderna this morning. Small caps get a bid, big tech does not.
Well, yeah, it's a shift that's going on, and you look at the Morgan Stanley note out yesterday where they lift up their targets. People, John, are really beginning to recalibrate. I want to go back again to the way we're seeing people lift up 7%, up 6%, whatever the single-digit move is. I really question if that's framed into people's minds right now. They're buying, but they're just buying to be on board. They're not buying to go to a reachable target yet.
Morgan Stanley, 3,900 year-end 2021. And Lisa Abramitz in the mix with that call is a call on a bond market for a higher 10-year yield. This morning, as you said, right at the top of the program when that headline came through, Lisa Abramitz, we are not getting that move in that bond market that some people might have thought you might get.
And it's actually rolling over. It's actually even more muted now. You've got barely any move at all at this point on the 10-year yield, which is very interesting, especially with the Morgan Stanley call, I believe, of a 1.45% 10-year yield by the end of next year. The bet here, perhaps longer-term growth doesn't escalate that much. Perhaps we return to a new normal that is still slower growth with a whole lot of debt and an overhang still from the pandemic, John.
In just a moment on this program, we're going to turn to a panel at the New Economy Forum. And on that panel, Tom, will be Blackstone's Steve Schwarzman. In the news over the weekend in the Financial Times, because there was a call of business leaders, and Mr. Schwarzman was one of those participants on that call. The Financial Times reported over the weekend that he defended the president's right to challenge the results and questioned